Futuristic skyscrapers tower into the air. The rich Gulf states have built their cities using money from their huge oil reserves. But global oil prices are down at record levels, hovering around $30 a barrel. And the region's top producers like Saudi Arabia, Kuwait and the United Arab Emirates are feeling the pinch. The drop in oil prices comes down to the simple economics of supply and demand. Saudi Arabia, the Gulf's largest producer, isn't selling as much to the United States, which has nearly doubled its own production over the last few years. Now Gulf countries find themselves competing for Asian markets, further driving down prices. The world cartel of oil producers OPEC has been criticised for not intervening to stabilise the oversupplied market. Saudi Arabia has pressured Gulf states not to cut production, fearing that would mean losing out on market share. That decision may backfire. Last year, Saudi posted a budget deficit of $98 billion. That's 15% of its GDP. And the IMF says revenues of the oil-rich kingdom and its Arab Gulf allies will slip by $300 billion this year. Dubai has had some success in diversifying its economy away from oil. The Emirate has a strong tourism sector and is a key global hub for shipping and air travel. But like the rest of the Gulf, it's been hit. Some subsidies have been cut, and there's even talk about introducing corporate tax and VAT.
I do think we are seeing a serious transformation and transition in the Gulf, where after decades of kind of saying that they know they need to diversify their economies and transition away from oil, I think this shock has kind of prompted at least the beginnings of significant steps in that direction. But I think it's going to be a drawn out and difficult process.
But Gulf states seem to be sticking to the same policy. They're worried about their regional rival Iran, now coming in from the cold after decades of sanctions. Tehran wants to increase production as it joins the international market. Saudi Arabia, which is comfortably sitting on a $600 billion sovereign wealth fund, isn't ready to cut production and give up its market share. The politics behind this crisis could mean the big oil-producing countries of the Gulf might be willing to ride it out, even if that signals difficult times ahead. Ashraf Helmi, The Newsmakers.